Hi guys, this is a video for my beginner traders. It's part of the course that I'm sharing on my YouTube channel and in my Patreon account. This is for you if you're just getting started in understanding about the stock markets and you'd like to become a stock market trader. This is going to give you a general understanding of what stocks are, how they work, what drives the price and things like that. So let's just get into the video. So what is a stock? A stock is a fractional share in a company. So when you own a stock, you've purchased a fraction of a company. There are stocks that have particular ownership rights attached to particular shares. So, for example, a lot of stocks will allow you to vote at general shareholder meetings and basically control the company as a part owner. I said here, the stocks are generally, publicly traded stocks are generally exchanged on well-known stock exchanges such as the London Stock Exchange, the New York Stock Exchange. In order for this to happen, in order for stocks to be sold to people in the public and not privately, they need to be floated first. They're floated on a stock exchange, one of these exchanges, and then people can just go and buy the stocks like they're buying a McDonald's cheeseburger. They can just literally go in there and buy one piece of Apple or one piece of Amazon, something like that. I've just put a little note for you here that a hostile takeover can happen where, a company's controlling share. So, let's say the company's got 100 shares and then someone goes in there and purchases 60 of them. When that happens, it can be a hostile takeover where the existing owners, the existing management structure don't necessarily want a new owner, but someone's just gone in there and purchased all of the shares. So that this can happen, and they exercise their rights as shareholders to control the company at shareholder voting meetings and things like that. They can vote directors in and out, they can fire directors, they can do whatever they want once they're the controlling shareholder. And that's just a bit of information about what stocks are and where they come from and what they're used for. So just a bit of info for you in relation to trading. So you can actually purchase the stocks directly and be entitled to dividend payments from owning those stocks. So those are the stocks we just talked about on the previous slide. An alternative which most traders work with is that you can predict price movements of a stock in a contract for difference account, CFD account. So what you're doing there is you're just entering into a contract to say, I think the price of this Apple share is going to go up, and then the other person on the other that's party to that contract is saying, no, I think it's going to go down, and you're agreeing in the contract that if it goes up, they pay you some money. If it goes down, you pay them some money. So I've said, just for a note for you, most CFD accounts will involve using margin. Margin is a deposit that you put down to enter into these CFD contracts, and the other part of the funding is funded by a loan. I'm going to do a whole separate video on this because it's something that's important for new traders to understand, and the topic is bigger than this introduction. So you just need to know that most traders trade with a CFD account rather than actually purchasing the actual stocks. So what about the big picture of all stocks? So I've just said here, most of the large stock exchanges are highly capitalised ones, and they rank from 1 to 100 and 1 to 350. So as an example, I've put here the FTSE 100. That's the top stocks on the London Stock Exchange. These are the top capitalised stocks, meaning, I think the technical definition is that they're the most traded and they're the amount of trading that goes on those stocks is the highest in value. And then you've got FTSE 350, same thing again. The NASDAQ, this exchange, an index is focused heavily on tech stocks. For example, Apple and Google sit on the NASDAQ. S&P 500, these are just more general stocks in America by market capitalization, so the value traded. You can also trade the movements of these indices as well as the individual stocks. So, if you trade the movements of the FTSE 100 and you're saying, I predict the FTSE 100 is going to increase in value, you enter a contracts for difference trade on that prediction. What you're saying is that you think on average the top 100 stocks in the UK are going to increase in value. And what that index is doing is it's tracking the movement of those top 100 stocks. It moves in accordance with the average of what all of those stocks, those 100 stocks, are doing. So what causes the price to move on a stock? In a nutshell, the price moves with volume. So it's like any other economic model, if you like. If people are buying lots of apples, the price of apples are going to go up in general. And if people are paying more for apples, the price of apples are going to go up even more. So it's driven by volume, like any other economic situation. The volume is mainly driven by big hedge funds and the people that have got the ability to buy lots of stocks at once. So it's the hedge funds, it's the pension investment managers. So I just said here it's driven by supply and demand under, same sort of thing as the economic model. When people sell the stock more, the price will shoot down. And I've just given you a little note here to note the correlation between the volume and price here on the chart. So just to explain here, these little bars here are the volume movements, and then this is the price of this Apple stock. So you can see as the price was going up there, so was the volume. You can see it had low volume here, increasing. Then it had a pullback and the volume dropped, you see. It's not always a perfect little picture like that one, but here's another one that looks quite easy to understand. So you can see the price was falling and so was the volume. Let's have a look at what we've got next. So is there anything else affecting the price? So in short, the big news such as catastrophes drive volume, which in turn drives the price. So if a war breaks out, a lot of the people who own those stocks or who have entered into contracts for difference on those stocks are going to start selling. Some of them will start selling because they're worried that the price is going to drop. So that will in turn drive the price to drop. It can be like a self-fulfilling prophecy, and it's like a snowball tumbling down. The more that the price drops, the more people have fear, and the more that they're going to sell. So I've just said here that the two emotions which are always at play in the stock market are fear and greed. So people are either afraid of losing their money, or they get greedy and they want to just try and hang on to trades potentially too long and get more money than what they perhaps should have done. So how can you predict the price movements of a stock? Traders tend to use either fundamental analysis or technical analysis. So fundamental analysis is the analysis of a company's key performance statistics, such as liquidity, its earnings ratios, and these can be derived from its latest set of accounts and forecasts. So, liquidity is just referring to how easily it can convert assets into cash, ultimately. And its earnings ratios. How much money do you have to put into that company to earn a said amount of money? So let's say, if it's got high earnings ratios, it means you might only have to put 5k in to get quite a good chunk of that as earnings each year. Whereas if it's got low earnings ratios, you might have to put 5k in to get, an extreme example, putting 5k of capital in to get 10p a year. That's an extreme example, but just to illustrate the point, people look for companies with high earnings ratios. Technical analysis, on the other hand, focuses instead on the price movements on the charts and the patterns which occur. So this course in particular is designed to help you understand how to use technical analysis. I am a chartered accountant, but I don't actually use fundamental analysis. I purely trade on the basis of technical analysis. So people can use patterns on the charts, and these occur from places where people tend to buy or sell repeatedly. So they look at those patterns and they make predictions that the patterns are going to repeat themselves, and then they can make money out of the patterns. So that's as far as I'm going to go into that for now. You're going to learn a lot about technical analysis with what I'm going to be sharing with you on YouTube. So I just said here some of the fundamental analysis metrics that they look for include price to earnings ratio, return on equity employed, current ratio, this is to do with cash, and debt to equity ratio, and their gross margin. So just reiterated here, this course is designed to help you become an accomplished technical analysis trader. Look for recurring patterns on the charts to predict price movement. So I've given you some examples here. You can see here that the price keeps hitting this area and then going down. So what tends to happen here, and I'm not going to go into support and resistance too much here, but you know, the price was channeling between these two levels. You can see there's a little pattern of it happening. So it's hit that, come down here, hit that. It's hit this two times. So, you know, an accomplished trader might be looking at thinking, like, there's a strong support level here. It's hit it there previously as well and come down. So it's like there's a little level here where the price keeps rebounding. So when the price comes down here, someone might look at it and say, right, this is a good buy opportunity. And lo and behold, you can see the price did go up again. So technical traders, technical analysis traders, look for these patterns on the charts, and they try to predict price movements on the basis of these patterns. So that's the end. I hope you enjoyed this video, and it would really help my channel to grow if you could give me a thumbs up, and I'd love to have you as a member of the channel. If you want to watch me place trades in the market and understand where I get in and out based on my personal strategy that I teach, you can get all of that on my Patreon account. And if you want to get a discount to the chart software that I use and with TradingView, you can get that linked below. Right, thanks a lot guys, bye.